Assalamu alaikum students. So lecture number 3 on the bad debts chapter. We're going to introduce and start talking about provision for doubtful debts. That is very common in the sole trader partnership adjustments as well. And as you can see, the question will, if the complete 15-mark question comes on bad debt as well, they are definitely going to ask you about the doubtful debts. Okay, but first we are not going into how to solve. First we are going to understand that what is the meaning, what is the learning from provision for doubtful debts, and what type of theory questions you are going to get, so you can get full marks and at least theory questions of the provision for doubtful debts. So as the word itself suggests, that it is doubtful, that you are not sure about it, whether you are going to receive the funds, you are going to receive the amounts that the customer owes, the debtors owe to you, or your customers owe, receivables owe. So because आप sure नहीं होते इसमें, or let me give you an example on this, and first let me explain you what is provision. So provision is basically an estimate. Okay, so provision is an estimate that you do for the doubtful debt. So always remember that provision is going to be an estimate that you think that this much we are not going to receive. Okay, this much will not be able to receive. Okay, and doubtful debts is basically, what is the meaning of the word of doubtful debts? I have break this concept that provision is an estimate and doubtful debts is basically that it is the risk that some customers might not pay. Okay, it's the risk that customers or your debtors or receivables will not pay the debts. Okay, will not pay the debts because you to the one who you have sold goods on credit. Okay, they will not pay the debts. Okay, so let me give you an example and how it works as well. Okay, so the example is basically that, let's say you have a huge company. Okay, and you sell goods on credit. Okay, so example is that a large company AB, or let's say ARS Limited. Okay, so there is a company of ARS Limited and you have receivables. Your customers are, like, you sell goods on credit and receivables are around 500,000. Okay, let's just assume that this is the amount. So receivables are 500,000. Okay, so you have sell the goods, your business works on credit, you sell goods on credit. So I'll write down these things as well. You sell goods on credit. Okay, so that is the importance here. And now because you sell goods on credit and the total amount at the end of there is 500,000, that you have to receive this amount from a lot of customers. Okay, this amount is, let's say, made of around 500 people. Okay, or let's say this amount is made of 1,000 customers, 1,000 debtors. Okay, so definitely there is chance. Okay, you think logically, you think carefully, there is a chance that, sir, some of them will not pay the debts. Okay, usually happens as well in every business. Let's say that due to any reason koi bankrupt ho gaya, some of them are not able to pay, some of them run away. Okay, some customers run away, some of them don't pick up the phones. Okay, so so we can say that we have 1,000 debtors, 1,000 customers that make up this amount, and we don't know how many. So there's a risk that there's a doubt. Okay, risk or doubt, the word is better, that some customers will not pay. Okay, some customers will not pay, and that is why you estimate the percentage, you estimate the provision for doubtful debt because of the accounting concept as well. So there's the doubt that some of the customers will not pay. And now this was the logic. Okay, this was the understanding that some of the customers will not pay. So what do is basically you assume an amount by using the percentage, and I'll tell you how the percentage is determined. So you say that around 2% of this amount, like you decide the rate that out of $500,000, 2%, at the rate of 2%, you are not going to receive those debtors, those customers amount. Okay, you are not going to receive your amounts of 2%, so which will be 500,000 into 2%, that will be, sir, around 10,000. So $10,000 will be a loss on you, and we are not going to receive that. So that is basically a basic example and idea. They will doubt that some customers will not pay their debts. Okay, will not pay their dues. Okay, that's what I've written as well. So what happens logically as well, if I give you, this is an introduction and idea. Now coming to the main understanding is basically this is linked with the accounting concept of prudence. Okay, this is linked with the accounting concept, that is the prudence concept. Okay, so we are learning actually the prudence concept here as well. That, sir, the prudence concept states that basically if you have unanticipated losses, if you are thinking that some loss will be done, so you give an estimate for that and you record it. Okay, so prudence concept is basically based on the concept that if you have actual transaction, actual record, then there's no problem. Okay, but there are some anticipated transactions. Okay, if you can anticipate that, you don't record the gain until it is done. Okay, we say that in the prudence concept, let's write it down the definition as well, that until the gain is achieved, okay, you don't record until gain is achieved. Okay, you don't record, जब तक आप सेल्स नहीं कर दो, जब तक आपको पैसे ना मिल जाएं सेल्स के, जब तक आप रिकॉर्ड नहीं करते, तो you don't record until gain is, you can say, realized. Okay, you don't record until gain is realized. Okay, you do nothing about it until the gain is realized. Okay, if you are anticipating some transaction, so let's say someone asked me that, can you will you be able to give me these product for this amount at this date? I said yes, I have this much 35 package of goods available, you can purchase them, but until unless the person pays me, the customer pays me, I'm not going to record it. But for the loss, they say that if you can anticipate the loss, okay, you can anticipate the loss, you are going to record it now, and that is why you have to make provisions, that is estimate. Okay, so you anticipate loss and you are going to make estimate for that, and you are going to estimate for that for the losses. Okay, so अगर आपको गेन अभी तक नहीं हुआ है, आपको पैसे नहीं मिले, तो आप उसको रिकॉर्ड नहीं करते, बट अगर आपको लग रहा है कि आपको लॉस होने वाला है किसी प्रोडक्ट पे, तो आप उसको पहले से एंटिसिपेट कर लेते हो और उसको एस्टिमेट करके एक अमाउंट की यू आर गोइंग टू फॉर्म द प्रोविजन. दैट इज बेसिकली द वर्ड प्रोविजन मीन्स एन एस्टिमेट. ओके, सो दैट इज बेसिकली द प्रूडेंस कॉन्सेप्ट. And that is what you're going to talk about, that every business, now linking it with provision for doubtful debts, is going to be, sir, that every business which sells goods on credit, they faces the risk of bad debts, and following the prudence concept, the business should provide for this anticipated loss in the form of provision. Okay, so I'll write down this important things as well, that following the prudence concept, as I said, this lecture is only based on theory and understanding of provision for doubtful debts, what's happening. So following the prudence concept, the business should provide for the anticipated losses. The business should provide for the anticipated losses. The business should provide for the anticipated losses in form of the provision. Okay, in form of provision. Okay, so that is basically a summary. In the red color I've put it, that due to prudence concept and the nature of it, you have to do provision for doubtful debts based on the prudence concept, students. Another concept that you can attribute students with the provision for doubtful debts is basically the matching concept as well. So matching concept can also be written if the examiner asks questions that which concept can be applied. So you can write both about it, the prudence concept, and you can mention about the matching concept as well, that the matching concept, it's basically states that every expense should be matched with its revenue in the current financial year period. So because we have bad debts, and bad debts is an expense of the current year, so you have to record it in the current year. So expenses, each year expenses, and matching concept, also the word of accruals is used here, that it will also be called accruals concept. This is the other word for that. So the every year expenses should be matched with the revenues. Expenses should be matched against the revenues for the current year, and because bad debts is an expense, so that's why this concept also comes in, that expense should be matched against the revenues of the current financial year. Okay, so the word important is of the current financial year. So जिस साल का जो expense है bad debts का, वो आपने उसमें record करना है of the current year financial statements. Okay, so these type of questions will be coming in the theory for the provision for doubtful debts, and you need to understand that basically we don't want our debtors to be overstated. If you see this question, that is, the theory will be coming that state 1 accounting, it's February-March 2017 paper, state 1 accounting concept that is applied while making the provision for doubtful debts. So you are going to write the answer that 1 accounting concept will be, sir, prudence concept. Don't have to explain, just mention prudence concept, or you can write matching concept as well. Okay, so it can be prudence concept, sir, or it can be the matching concept. But I would prefer to write prudence concept first because that have more priority. Similarly, another mark theory question is that why state one reason why business may make a provision for doubtful debts. So the business will definitely make provision for doubtful debts because they want to avoid over, you know that you have to represent in true and fair view in the balance sheet. So you will have to avoid the overstatement of the trade receivables balance. Okay, so you'll avoid the trade receivables being overstated. Okay, so you'll avoid trade receivables or the debtors being overstated in the financial statements, that is in the statement of financial position. So that is why you are going to do the provision for doubtful debts. You don't want the trade receivables being overstated in statement of financial position. Okay, similarly, another type of theory question was there in this question of 2019 May June that stated the same thing, that this time they are asking you to explain one accounting concept which is applied when making a provision for doubtful debts. So one accounting concept, so you can just mention about the prudence concept and explain it clearly that sir, this is the amounts expected to be received from trade receivables should not be overstated, and you will have to do the prudence concept because we are estimating that there will be some customers who are not going to pay the debts, so that will be a loss for the company. Okay, that will be loss for the company ARS Limited, and that is why we have to accommodate it. Okay, so next video we'll talk about how do we do it and the numerics about it and how many different types of provision for doubtful debts are there. Okay.